guys, hello and welcome back to Green Pips Effects. And on today's video guys, we are going to be talking about this concept of premium and discount areas. So what do these areas mean, right? So um, they vary, right? So when we have a bullish trend being delivered to us like this, right? And then when we have a bearish trend, right? So we're gonna take a look at both examples, right? So firstly, when we have a bullish trend, and then secondly, when we have a bearish trend. So when price makes a high, right, comes down, makes a low, and then breaks structure higher to form a new high, right? This is when we have an uptrend. Now, when we're trading in this uptrend, right, we want to catch buy moves, of course, right? We want to see price retrace into an area of potential demand, and then from there, we want to catch these buys and target the highs, of course, when we're in an uptrend. Similarly, when we're in a downtrend, right, when price is making a low, right, a higher low, and then a lower low by breaking this previous low, right, our main target is to see price retrace, right, into a potential area of supply and to catch those sells and target these lows. So this is the overall idea that we have in our minds as traders. Now, how do we trade these, right? So within this context, right? So let me just reduce these. Let me just reduce these drawings here. So when we're in a context like this, right, and this, right. So when we're in a bullish context or in a bearish context, right, price will normally make this move, this extension move, right, which is the move that breaks structure either to the top side or to the downside based on the trend. And from there, price will make a pullback into an area and then make another continuation, right? Similarly, similarly in this downtrend, right, when price makes a low, price will pull back into an area of supply and then come back even lower. So with that being said, when we have a range from a low to a high or from a high to a low in a downtrend, we take this range as a whole, and within this range, right, we have a low and then we have a high, right? And from here we have the mid zone, perhaps somewhere in here, I'm not quite sure until we put in the actual drawing, of course. So let's say we have a mid zone here, right? So price has two tendencies, right? But the greatest scenario, right? So price has two scenarios in this sort, right? So price could come and then go, right? Price could just slightly come down and then make that move up to break this high and form a new high. Or price could make a deeper retracement into an area of demand down here and then make that up move to break this high here. Now, similarly to the downtrend, when we have a range from a high to a low, which is now the newly formed lower low, price is most likely, and then we have a mid zone somewhere there, right? Just taken as an example, right? So price could rarely just slightly come up here and then move or make a deeper retracement. Now, what we want to trade as, what we would call a good trade is that trade that's taken from a deeper retracement, which is from this area of the 50% or this area here of the 50%, right? So when we're in an uptrend, we want to trade this, we want to trade below the 50%. And if we're in a downtrend, we want to trade above the 50% area to catch, longer, to catch these large sales, right? Which are actually going to be profitable for us. So this is the area where the concept of premium and discount levels occur, right? So I'm just going to use the fib tool, which I designed, right? So we have three levels, right? So in an uptrend, this tool, you just place it from the 0 to the 1. And let me just, show its settings so that you guys can actually see this. So here, right, you can see that all the other levels have been unmarked and I've just left these three areas marked, right? So we have the 0 with the black color, we have the 1 with the blue color, and we have the 0.5 with the red color. So okay, right, so when we have something like this, right, we have a low and a high, right? So this 0.5 level, so the 0 is at the low, the 1 is at the high, right? From the low to the high. And the 0.5 level, so this is the level that tells us whether this pullback is good to trade or not, right? So we want to see price retrace deeper below the 0.5 level, of course, into an area of demand. And from there, we can now catch these buys and target the highs. So with that being said, this is where the concept of premium and discount levels occur, right? So the premium level is this area here, right? This blue area here, right? So this blue area right here is what we call the premium. Sorry, it's not the discount, it's the premium level, right? This blue zone right here. And this red zone, right, is what we call the discount zone or the discount area, right? In an uptrend. However, in a downtrend, this shifts, right? It becomes the vice versa of what we just said. So if we take this tool, right, from the, sorry. So like I was saying, right? So in a, let's just move that. So in a downtrend, right, it becomes the vice versa, right? So the blue zone becomes down, so this is the premium level, and the red zone goes up, which is the what? Which is the discount level, right? So all in all we are seeking to trade is the discount zone, right? We always want to position ourselves within the discount zone and not in the premium zone. So we could just label this right real quick. So there we are, right? So we have the discount zone below, right, and the discount zone above, right? So when we're in an uptrend, right, we want to see price make a deeper retracement into the discount area, of course, into an area of demand, right? And from there, we can now catch the buys and target the highs, right? While we're in a downtrend, right, we want to see price make that deeper retracement into the discount area, of course, into an area of supply. And from there, we can take the sells and target the lows. So this is the overall idea based on the premium and discount areas. Now, however, let's just go to the charts and see how this happens. Okay, so right there. So I'm just gonna showcase the examples, and then we'll be done, right? We just don't want to make this too long, right? There. So technically, what we're seeing in front of us in terms of order flow is that we have a pretty much bullish trend, right? So you can say that we had a low, right, a high here, right, which retraced and made a low and then a high, right? But from this area here, we can now see a break of structure right here to tell us that this market is what? Oops. So we have a break of structure right here. Oops, once again. Okay, so let me just get this right this time. And from there, just gonna name this as a break of structure. Let's just make that a little bit bigger. So we have a break, we have a low, we have a high from a low. But when we showcase, when we follow up price, right, which low created this high, you'll find out that it's this low right here. So this is the low that made this high. So technically, we're just in a range between this low and this high here. So we're just gonna draw our fib tool, right, from the low to the high, right there, right? So this right here is our, so below this ray here, this is our premium area. So sorry, this is our discount area that we're looking to trade from, right? Well, this area right here, right, this is the area that we're not looking to trade from, right? So you can just sit back and of course have an alert maybe when price goes below this right here into the discount area and start looking for trades. But of course, when we know the concept of supply and demand, we can easily find our areas of interest, right? So frankly, my area of interest could just be this order block right here, which price comes in, right, taps beautiful mitigation right there. So this could be theoretically, right, this could be my buy entry, right? If I was going to trade this price action like this on a 2-hour without any refinements or anything, so this could have been my trade right here. And of course, I'd be looking to target the highs, and that would have been a great 7.3 RR trade, which is amazing, guys. So that's example number one on how you could trade this, right, based on marriage of different concepts, right? So you can see that you can't just trade premium and discount, right? You need to know in depth other concepts too, like structure and supply and demand, for you to be actually profitable by using this technique. So this is just something to showcase or to help you in your understanding of price, but it's not something that you could rely on and trade and become actually profitable by just using the premium and discount thing, right? It doesn't make sense. So that's a 7.3 hour trade. So now we could have another range. So from there, we now have another break of structure right here. And from this break of structure, right, so we just have a break, we have a structural break right there. We can just make this big. And We can just remove this now. So from this break, right, we can now see that a new high has been formed, right? So let's just take it as this high here, right? So a new high has been formed, but you know, where did this high come from, right? You can now clearly see that this high came from this low here, right? Because price came up from this high here, came down from this low, right? Came up, broke structure from this high here, right? However, this is an internal price action from this low, and then this low is the one that caused this break of structure and the overall break of structure. Now, however, it's very important to know these other concepts, especially structure and supply and demand. Like I said before, why? Because you could easily get this wrong and, you know, have your fib tool priced wrongly, right? From that low maybe to this high. And from there, you could now start to look at areas like this area here and this area here, which are technically at this point insignificant, as you can see. So price never reaches down here, right? So basically you couldn't have a trade in here. Why? Because just because you don't understand structure well, and obviously you couldn't get trades, right? Trades that could actually be profitable to you. That's why I say it's very important also to know other concepts for you to actually be able to make profit out of this tool. So technically we're just in a range between this low to this high, and this down here is our premium area, right? So sorry, our discount area. And from there, right, if I was looking to trade this, of course my last down move before the up move could just be okay, we could basically just take this candle here, right? Boom, because it's where the mitigation last occurred. And as you can see, right, price creates a high, right, plays around, and then boom, comes down, mitigates this area right here. Beautiful mitigation, another entry right there, right? Easy peasy, as good as as good as it comes, guys. Boom, right there. So you can just target the highs, and that could be a great 5.1 RR trade. Now, you know, for a day, this is enough, guys. We'll probably tap into this concept in another video and go in much depth, right? But for the introduction of premium and discount zones, this is great, guys. I hope this video was informative to you. You know, if it was, then don't forget to like, subscribe if you haven't, turn that bell button on for notifications. And until the next one, guys, stay safe, have a nice trading week, and peace out.